Adinda Cresheilla, an MBA student of IPMI Business School. And for this opportunity, I'm going to briefly tell you of what we have accomplished this past few months of corporate finance class with Prof. Sembel. So these are some essential subsectors that the class have been covered the past few months. And the first one, we're going to start off by the first subsectors, which is the introduction of financial management. Then we also have capital budgeting, security analysis, capital structure, corporate restructuring, fraud risk management, and some special topics at the end. But for now, let's focus on the introduction of financial management. For financial management, we have 4 different types of goals. The first one is about the basic objectives, and for this one, the financial management will maximize 2 different things, which are wealth and profit, wealth maximization and profit maximization. Both of those will create significant and sustainable value creation. And the second is about the operational, which the objective is for time availability, the most effective utilization of finance, and safety of the investment. Third is about social objective, for timely payment of interest, taxes, and wages, payment of reasonable dividends, fair settlements with suppliers, and maintaining relations with financiers. And the last one is the objectives of research. The aim is to research new and better sources of finance. And speaking of value creation, it's what we're going to talk about next. First one, from value creation, we have return on invested capital, as seen the formula here. It represents the rate of return a company makes on the cash it invests in its business. So it's determine how well a company allocates its capital to profitable projects or investments. And next up, let's move on to cash flow. It summarizes the amount of cash and cash equivalents entering and leaving a company. So it is indeed one of the most essential and fundamental subject that we need to understand. Also, next we also have return on equity. It measures of the profitability of a business in relation to the equity. So ROE here also used in so many decision-making process. And also the last one, from value creation, we have profit margin. There are several formulas seen in the screen, but NPM, or net profit margin, is also one of the fundamental and essential value creation that we also need to understand fully. So next step, we have the principal agent problem. So in this part, we'll be concerning about the problems and solutions. The principal agent problem also prioritize between president of a group and the representative authorized to act on their behalf. And the first is about 3 main problems, which are the conflict of interest, asymmetric information, and moral hazard. But however, there are principles that are good enough to cover the problems, which are GCG principles, or the good corporate governance principles: transparency, accountability, responsibility, independency, and fairness. Next, after GCG, we have the Ramcharan Business Essentials. So this famous American Indian business consultant is also explaining his business essentials. First one we have is cash. Second, we have profit margin, velocity, growth, and lastly, we have customer focus. Next up, we're moving on to the next essential sectors, which is the capital budgeting. So here we're going to learn about the time value of money, or shortened as TVM, is also one of the materials that are also mentioned earlier in this video. The concept of the TVM, yesterday, today, or tomorrow, are totally different. If we receive $2 today, it's worth much more than $2 in the future due to the opportunity cost. So these are some application of the time value of money, such as mortgage, life insurance, personal financial planning, contract values, and da 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 da. Let's talk about the formula. This is the formula for the future value. So FV here represents the future value. So PV, present value, and then we also need the annual interest rate in order to predict the opportunity cost. After this one, we also need to define the present value. It's the same one, just we need to divide it. We also have some methods regarding to this capital budgeting. Let's talk about NPV or net present value. So this is the formula used for determining the net present value. We also have the internal rate of return formula. It's a bit more complex, but here are the formula needed. Also, we have profitability index. So in order to define this, we also need to define the present value first. Here we have the payback period. So let's moving on to the security analysis. Speaking of analysis of securities or portfolio investment, we have two types of investing, which are active and passive. The passive, it's about following the market, but nevertheless, active is also investing about and knowing about fundamental analysis, technical ones, and also market or investors' sentiment. Hence, in order to reach that, there are some strategies in order to gather the right and optimum value. So the first one is information gathering, decision making, monitoring, and performance evaluation. So this is the fundamental analysis that I've been covered before. We have intrinsic value and market price. So the decision making from this sector, if the intrinsic value is higher than the MP or the market price, we should buy it. It's a very good deal. But vice versa, just sell or short sell. However, if the amount or the value is equal, we should hold to the fairly priced. Hence, for the financial statement analysis, we have profitability, liquidity, activity, leverage, market ratio, and lastly, industry benchmark and historical trend, and also the DuPont analysis. So here in the DuPont analysis, we come back to the return on equity, net profit margin, total asset turnover, financial leverage. These are some very fundamental definitions that is used for the decision-making part. Talk about the technical part. The first one, we have momentum versus reversal. Second one, the trend, is it upward or downward trend? Support, gap, moving average, triangle, asymmetric, and asymmetric. So next one on the menu, we have capital structure. The first about capital structure is talking about equity, how this equity runs in the blood of financial management. Because as we all know, assets minus liabilities means it is the whole value of equity. Hence, it is the residual value of a company after all its assets are liquidated and all liabilities to its creditors paid. We also have long-term debt, or LTD. It's the outstanding debt the company holds. After a maturity of 12 months or longer. Retained earnings also mentioned here. We also have the formula in the screen. And next one, we're moving on to the corporate restructuring. This also happens a lot in some companies. This covers the outcome of financial distress, surviving and transforming business. And restructuring corporate structure is about its financial distress, the surviving and transformation of a business. And also, we need to learn about the fraud risk management. Thank you so much, Prof. Roy, for teaching us this part because this is one of the favorite subject that I enjoyed while having the class. This material talks about shenanigans, fraud, triangle, and also occupational fraud. Hence, the shenanigans itself has three different definitions. The first is about devious tricks used to especially for an underhand purpose. Second one, high-spirited or mischievous activity. The third is about a secret, dishonest, and tomfoolery, silly and high-spirited mischief. Talking about special topics, quick brief about dividend. Dividend is the distribution of a company's earning to its shareholders and is determined by the company's board of directors. And about dividend policy, when we pay the dividends, stockholders receive an immediate cash reward for investing. It involves two decisions. The first about how much the firm's earning and how much it should be distributed, and after that, how much it should retain for capital investment. Why is it necessary? Because consistent paying dividend will show the good performance of the company's image, back again to the company's branding. We also have international finance from the special topics, which talk about the foreign exchange market, inflation rate, forward versus future market options, and arbitrage strategy. So that's all about corporate finance class that I have discovered. And that's the ending of this video. Thank you so much for watching and tuning in up to the ending of this video. I hope you get all the fruits and the juice of the corporate finance class as I did. Thank you so much, Prof. Roy, for all your valuable lessons. I'll see you in the next lesson and I'll see you in the next video. Bye-bye.